Hi everyone, welcome to today's trade of the day, and for today's trade of the day I will be looking at the Aussie dollar. So what I have here is the Aussie dollar on the daily chart, right? And I just really want to focus on the recent price action here in technical analysis. While technical analysis is really the study of historical price action, but the movement that really affects where price is currently headed are the more recent price movements. Okay, so if we were to start with price movement over here, price made a high and it made a low, it made a lower high, it made a lower low, it made a lower high. What we can expect price to do is actually to start pushing down and make a lower low. And in that sense, then that would mean that price is in a downwards trend. Alright, so if price is in a downwards trend, we can actually connect the highs. Okay, you try to touch as many candles as possible. Alright, but not cutting the candle bodies. Okay, it's okay to cut the candle wick or the shadow, because then on the lower time frame we can just adjust the trend line accordingly. So I've drawn a trend line. We see that price touched once, twice, and seems to be coming back for a third touch. Okay, and if we look to the left for graphical price action, right, we actually have a level where there is a strong support. Okay, and then price broke out and tested it twice as resistance. So price could come back again to test this level as this intersection, the descending trend line resistance together with the horizontal resistance for the third time. Okay, so this is a level that we're looking at. Further, we can actually use Fibonacci retracement for the last movement from the swing high to the recent swing low. Okay, sorry. High to low. Okay, and we actually can open up all Fibonacci ratios, and we can actually see that right now price coming up to test our resistance at 72.10 and the descending trend line at the 61.8 level. So I'll just highlight the 61.8. Okay, so this is on the daily. We have the resistance, and I'll just use the recent swing low as our support. Right, quickly let's go down to the 4 hours. Alright, like I said, we can actually tidy this trend line up. Okay, try not cut the bodies. Okay, so it's something like that. Alright, and we already see that price is pushing higher. So if we follow price action closely and we look at this zigzag movement, we can actually use Fibonacci extension 0.1, 0.2, 0.3 and open all Fibonacci ratios. Alright, we see that the 161.8 is in line with our 61.8 daily retracement. So we're starting to find a confluence of Fibonacci levels. Okay, so this is really a very strong level that we are actually going to see price push towards. So something like that. Okay, so as we mentioned, on the daily we are bearish, but on the 4 hour we see that there's a chance for price to push higher before coming back down. So on the intraday we can actually take advantage of this short movement. Alright, so another thing that I'll do is I'll take a Fibonacci retracement from the low to where price currently is and open up all Fibonacci ratios. And we actually see the 23.6 at this graphical overlap level, right? So anything above here, okay, we can expect price to push higher towards our daily zone, daily Fibonacci confluence zone, where we will eventually short. But for now, right, the levels that are really nice is this 23.6 graphical overlap, and at the same time we see price testing 61.8, okay, before bouncing, right? So I just want to highlight these two levels. All right, 23.6, 61.8. Okay, so you have the two levels. All right, so very simply, this level 23.6 can then be our buy entry. So we're waiting for price to retest the level, and this 61.8 can become our stop loss. Now, I'm not going to put the stop loss exactly at the swing low. I'm going to back it up a bit just to give my trade a bit of room to breathe. Okay, and of course this will be the daily take profit level, where from there we can actually swing our trade down the other way and play to the daily low. Now, another thing that we want to note, okay, is that the stop loss is really the level at which I know for sure that my bullish bias is wrong. So if price were to come back below, alright, and break below my stop loss, okay, this actually gives me a chance to flip my trade the other way and just immediately go short. Alright, so thanks everyone for the time that you've given me today. Wish you guys all the best in your trading, and I'll catch you guys tomorrow. Take care.